And welcome into the Roundtable, where obviously we're dealing with some very tough economic times at this point in time, but we're also still seeing investment going on. So we thought we'd talk about essentially investing in a climate where there was basically an emotion, or rather a survival environment. Of course, we've seen a number of companies, unfortunately, go to bankruptcy, or like Convoy, shutter its doors completely at this particular point. We've got a couple of people I'm going to talk about there as well. Alan Adler, our Midwest Bureau Chief, joining us from Michigan, and also Ben Gordon, Managing Partner of Cambridge Capital, joining us as well. Gentlemen, thanks so much for joining us here for this roundtable. Alan, let me start with you. How apprehensive do you think are investors at this point, especially in the auto and truck making sector, knowing that we haven't really seen any kind of new competitors kind of jump into the fray here in a while, kind of the long-term, at least dedication, if you will, of others that have tried to make their way. And again, there've been some bumps and bruises here and there, but really haven't seen anybody new jump into the space, either in the EV space or in the autonomous space.
Well, I gotta give you an exception there, and that would be Stack AV.
True.
This is the former Argo AI gang that they lost their support from Ford and from Volkswagen about a year ago, and they have now launched with SoftBank support. That would not be Masasan, but it would be another part of SoftBank. Perhaps $1 billion of backing. We don't really know the number. That kind of came from an economic official in Pittsburgh, but SoftBank has taken an interest. Brian Selesky, who has pretty good chops as an autonomous developer, part of the term that's often used is the Carnegie Mellon mafia of really smart roboticists, is starting up. They this week joined up with the Autonomous Vehicle Industry Association, not really doing anything that they're talking about yet, but they have launched. So that's one. Another one, perhaps keep an eye on, although they haven't attracted a lot of money in a while, is Wabi, which is kind of an AI-based autonomous company out of Canada. A lot of ties there to Uber over time, and Uber Freight and things like that. This is a very small fraternity, really, in the autonomous space.
Ben, as we switch things to the kind of the freight tech universe, obviously, we've heard a number of surveys saying that basically everybody's still looking for that competitive advantage, trying to invest in technology here or there. What are you seeing in the freight tech world in terms of investment? Is that slowing down, given what we've been seeing in terms of, obviously, again, bankruptcies, closings, things of that sort?
Yeah, thanks for having me. There's no question there's been a slowdown, and this has been the case not just for the last few months, but really for over a year now, with respect to capital markets in terms of freight and technology. Having said that, I'm noticing a couple of things that are different today. One, I'll tell you, and I speak from experience, we at Cambridge Capital are actively looking at several companies right now. We're in LOI discussions with 3, and we'll see what ends up happening, but I expect at least one of them will come to fruition. So I think we're certainly leaning in, and I think others are beginning to as well. But I think what's getting funded is different today versus 2 years ago. So number one, and this has always been true for us, but I think it's true for the market as a whole. The prioritization of unit economics, businesses either need to be profitable or have a clear path to profitability with compelling unit economics. As an example, there's a company that we're looking at right now, and not profitable yet, but high margins, and if they either reduce the G&A or increase the top line based on growth over the next few months, they'll be there in terms of profitability. So I think line of sight to visibility to profitability, certainly very important, I think, both for us and the market. Secondly, I think you're going to see more and more mergers between companies that are venture backed, where you'll see consolidation. That could be stock only or a combination of cash and stock, or otherwise. I think just to point out a couple of things. Our investment banking friends, affiliates at BG Strategic Advisors, put together the deal, the NavTrack LoadSmart deal. The details aren't public, but I think it's a good illustration of the fact that 2 good venture-backed companies where joining forces made more sense, and I think you'll see more of that. So I think probably more activity on the merger side than on the capital formation side. And then third, look, while I think the old line about Jack Benny, did he have deep pockets but short arms? I mean, I think that's true for the venture markets today. There's plenty of capital out there, but I think people are certainly being very patient. But I think you will start to see more of that. Interestingly, on the corporate venture side, as well as on the pure venture side. And the reason for that is if you're a corporate investor, you're usually looking to invest not only because you want to make money, but also because you want to create an edge for your corporate business, and so that continues to make sense, regardless of where you are in the economic cycle. So those are three themes that we're seeing.
Let me ask both of you, how much, if anything, do these closures, bankruptcies, et cetera, affect investors' mindsets? Alan, in terms of the makers, like we said, we've seen lots of humps and bumps and some closures in that respect. Is that slowing things down as far as investment is concerned?
Well, I would add a fourth thing to Ben's list, and that would be the shopping for something cheap. Right now, you've got in bankruptcy Proterra, which has pushed out its dates for auctioning off its businesses, both in terms of the transit bus business, the battery pack making business, and then infrastructure, chargers, and that sort of thing. That's not unusual in a reorganization, but what is interesting is that there are people interested in their businesses that want to do further diligence. They also are looking for the best deal they can get. So do you get sort of that floor offer like we saw at Yellow, in that bankruptcy, or do you basically go to auction next month? So you've got a lot going on in that space. You've got other companies that are sort of on the bubble. We've in the newsletter today, in the Truck Tech newsletter, we talked with Thomas Healy. They're going through strategic review right now in terms of whether to continue with the Hypertruck ERX, a natural gas and electric truck powertrain. The board there has been pretty tough on them, saying, look, what is your plan of sufficiency? And to Ben's point, how are you going to show profits? How are you going to turn this into a profitable business? Hyliion went public during the SPAC frenzy and has done a good job of holding on to its money. It's unusual in that space. But at the same time, it's going to need more money if it's going to actually make a dent in a very entrenched area of electric powertrains, because all of your legacy players, do this as part of normal business. And these guys are having to use what they got from their SPAC funds, as well as try to raise more money, perhaps for a transitional technology. So I think, again, Hyliion's a great candidate to be sold. The question is, who would buy them?
Ben, same question to you. Are you seeing, in terms of these bankruptcies, closings, is that affecting anything as far as your ability or others' abilities, perhaps, to open up the checkbook and say, look, we're willing to invest in someone?
Yeah, it's a good question. It's not affecting our ability to invest. I think it's affecting the psychology of the markets as a whole, and it also may be affecting the restoration of some kind of firm bottom with respect to the freight and freight-tech cycle. I mean, just to give you an example, yesterday I was at the TIA Technovations event and moderating the Shark Tank panel, speaking on the Shark Tank panel, where we had a number of interesting, innovative companies. And I'll tell you that the whole conference, biggest question that I got was Convoy, and what do we think, and what does it mean, and what implications it have for the industry. I don't know whether this will be the case or not, but certainly one possibility is that the closing of Convoy could actually, although it's very sad news for the employees and investors and partners of Convoy, could be good news for the industry if it leads to some pricing stability. If it means that freight markets have bottomed, and if it also means that freight companies and freight tech companies don't have to contend with someone that's raised over $1 billion and can afford to be a lot more aggressive with respect to pricing, because of those capital resources. And it may also prove to be a disincentive for other highly funded companies to use that capital on lower price as opposed to using it to get into profitability. So to the extent that The bad news and the sad news, involving closings of companies like Convoy and others, leads to some stability in the market. I think that will prove to be very good for the freight markets, for the freight tech markets, for freight tech startups, and for the category as a whole. So, we don't view that as a reason to stop investing. I think we view that as validation of the concerns that we had for the last year and a half about the state of the markets, and if anything, it causes us to become more aggressive. And as I mentioned, we're in LOI discussions with 3 companies right now. So we're looking to invest more in great companies right now because of and not in spite of these conditions.
Well, folks, 10 minutes can fly by very quickly when you have it's just good answers as these two have. For Alan and Ben, thanks so much for joining us here. Obviously, we're looking for a little bit better economic climate to try and make some of these dreams come true from an investor standpoint and from the company standpoint, but hopefully we'll see a lot more positive outcomes in the near future. Thanks for joining us.